Dwyfor, what is going on? What do you make of what's happening in China? Can the momentum of this rally continue? And if so, where are the bright spots and what do you think you should be really looking at?
Well, I think some of it sort of came out on the weekend in terms of the comments that came regarding the focus on consumption. And clearly...
That's not new, though, is it?
That's actually, it's not that it's not new. It's actually a 10-year-old story. I mean, I've been in Hong Kong long enough to know that the story regarding finding an alternative growth engine for China is at least a decade long. The previous administration, pre-Xi Jinping, actually made a point of wanting to rotate growth engines towards consumption. So we're back to the old story again. I guess where we're looking at now is there's a lot of uncertainty regarding what we would call sort of aggregate global demand. And so if you're an exporter, China, of course, a big exporter, as are many regional markets. If you're an exporter, you're somewhat concerned on the strength of ultimate consumption globally. Labour markets are strong globally, but obviously we're on the cusp of a growth slowdown or in the middle of a growth slowdown globally. In a way, the safest bet for you is to ensure that you can actually boost demand conditions at home. You can do that in many different ways. What the authorities are doing in China clearly is they're looking at that pot of big savings that are in China right now. They're also looking at very low levels of inflation and low levels of interest rates. Therefore, that is all very, very consistent with consumption. So it's the consumer sectors that are really going to benefit here. And maybe unsurprisingly, when you see the likes of Taiwan or Korea doing well, it's on the back of expectations that their exporters are going to benefit from a pickup in consumption in China. So that's where the main focus is right now.
So what does this do as far as, to your point, on this aggregate demand curve? You know, with China reopening, and hopefully they manage to slow down a soft glide lower as far as the Fed is concerned, right? Does that nudge that demand curve slightly in a better position for risk assets, right?
It does, and there are two counterweights here. One is the China reopening, and the other is, of course, the strength of the labour markets globally, which we know that labour markets are strong, and therefore consumer demand globally is quite strong. And so you have these two counterweights, all this talk about recession, all this talk about global growth slowdown. It is in the face of strengthening labour markets and also this China reopening story. And the China reopening story has clearly given a lift to expectations that global demand and global economic growth more generally is going to hold up pretty well. So it's a big story.
It's a huge story. And how does it affect the Fed's thinking? It's what I want to get to here, because, I mean, we're looking at 25 basis points as a rate hike this week. That looks as though it's baked in. Point being, is it going to be a dovish one or a hawkish one? And how will the language actually evolve, which is going to be crucial?
I think they have to be hawkish. They have to be hawkish because the absolute level of inflation in the US is still very high. And ultimately, inflation is one of their key mandates, as opposed to growth. Now, we are starting to see, so this is some proprietary data that we look at, we are starting to see online inflation beginning to fall in sectors that really up until maybe 6 weeks, 2 months ago, were still at sort of time series highs in terms of some of the monthly readings. So this fall in energy prices has obviously dragged headline inflation lower. We're now beginning to see signs that maybe the core inflation element in the US is going to come lower as well. So that's something to look forward to. If that happens, then it may be the case that the Fed has scope to be somewhat more dovish in the future. And that might bring it more aligned with what the market is pricing in regarding rate cuts at the end of this year. It's probably too early as yet for this meeting. So I think they'll have to go 25, but actually toe a pretty hawkish line with that 25. And there's still going to be this interplay between who's right or wrong, the Fed or the markets, when it comes to rate cuts by the end of this year. Our inflation profile actually suggests the markets might be right here. And actually there may be quite a big slowdown in inflation this year, at the beginning of this year, which we're going to get through base effects in any case.
Yeah.
So they have to be hawkish for now, but the narrative might change very soon.